I want to make sure we make a pit stop at this last item, and we can kind of blitz through this, guys. It's not because I'm trying to rush to the end of the show, but we've talked about HELOCs a lot. We've talked about scenarios for HELOCs. I picked this one from Bankrate.com because they've actually been doing a really good job recently of kind of hitting the nail on the head when it comes to, hey, this is market relevant right now. And they made this really cool article. Click in the description box below where the link to the article is, and it has the top 10 ways to get the best HELOC rate. So let's just rip through these guys, if that's okay, because we've kind of talked about all these things at the 30,000 foot level, and then we've also talked at the granular level where if you need help or you need to run a scenario past somebody and see if a HELOC is going to work for you, that's what we're here for. So can we just like rattle off some of these?
Perfect.
Right,
I mean, one of the things that I do want to clarify with people, because I've been getting, even though we've been providing this information to our clients, etc., they still ask, what's the difference between that HELOC and a HELoan, right?
Oh, good. It's good. Yeah.
So one of the things we understand, a HELOC is a home equity line of credit. It works like a line of credit for like a credit card, right? You get approved for say 100,000. You're able to utilize that almost like a credit card. If you could only use 5,000, 1,000 here, 10,000, and there's no restrictions on what you can use it, right? Whereas a HELoan, if you get approved for a HELoan for 100,000, they're going to give you the money up front. It's a lump sum. It's a payment. It's fixed. That's it. For the HELOC, it's going to be an adjustable rate mortgage. But now that we're getting the information that rates may be going down, it may be a good time to say, hey, I'll go for a HELOC, right? Because your payment is going to be based on your usage of that credit line. Versus a HELoan, you're making payments on the full amount day one.
Yeah.
You know?
Yeah.
So that's kind of like the difference, to put it in a nutshell.
Good clarification. Yeah. That's good to know, because they can be confusing because the acronyms sound very similar. So.
Very.
So really quick, top 10 tips. First one, maintain good credit. Hey, check. Covered good credit on the show.
Again.
If you don't know about your credit, you can get a credit check. Have enough equity. Once again, maybe you just got to talk to someone who's in your market, who is a realtor or loan officer who can help you give a real quick check of that. Consider different types of lenders. This can be, I can get behind this if, in fact, your local credit union is going to do better than, the big bank, if you will, the corporate banks, the big
credit
banks.
Credit unions are probably very good, a good pit stop to go in there and check.
Yeah. Understanding introductory rates. This one, I want to make sure we kind of, I'll say forewarn people, like introductory rates do have an expiration. It could be a couple of months, it could be a year, or maybe sometimes 2 years, but it just really depends on the terms and conditions of the loan. Look for rate caps, meaning the peak at which the HELOC could go up in a changing environment rate-wise.
Because it can change on an annual.
Yep. Yeah, there's a term for that. There's a term, a time term duration for that change, and there can be caps on that.
That's on a HELOC?
On a HELOC, yes, not on a HELoan, on the HELOC. And then factor in fees. So there are fees to closing any sort of lending transaction, so leave some space and some margin for that in your either personal budget to pay the costs or to wrap into the
usually it's an appraisal and a minimal fee.
Yeah.
They're very minimal. I want to say it's under $1,000.
Yeah. Watch out for balloon payments. That could be a feature in, not say less of what we see, but it's still something that is in the market to be aware of. Did you have a comment on that?
Yeah, balloon, a lot of times we don't understand. We think it's just a red balloon, right? So no, a balloon payment usually it's going to be like anywhere from 5 years, 10, 15 years. The norm, I think, on HELoans, HELOCs, they're like 15 years. What that means is you got 15 years to pay the full balance.
It's a lump sum.
Because with HELOCs, you pay interest only.
Right.
Unless you add more to it, you can pay it off. HELoans, you're going to pay that puppy off.
Yeah, and there's a date on the calendar in the future that's got a red circle around it where that whole payment is due. So that's the balloon payment.
That's the red balloon.
It could be at 5. I was trying to weave in the red part.
Yeah,
that's part of like the 5-year, 10-year, 15-year. Yeah. So beware of that. You could choose shorter draw and repayment periods, this is more of a suggestion, I think, in the article.
Yeah.
Look for fixed rate options. That is possibly good for you if, in fact, the fixed rate is better off for you during the time that you need it versus the interest only.
Exactly.
So there's that kind of tactical part. Strategize around that.
Strategize and the loan officer or the person assisting you, hopefully they understand the market and they have all this data that can indicate, hey, rates are going down, so why lock myself in at a 13% when I can get a 13%, I know that next year my rate's going to go down to a 10% or 9%.
Yep.
Right?
Yeah.
So-
And then the last thing they mention here is take advantage of discounts. And it's kind of a two-parter for me. Discounts are not always available. Sometimes they are. And that is the next point is that, remember, banks and lenders are in the business of lending money to make money in return. So they want to lend money out. So if you are in a position where you need a HELOC or a HELoan and they have the money and they're offering a discount, that should be like a identifier to you that they're looking to lend that money out. And sometimes you can get a deal.
Yeah, Will's got your money, and so does Brian.
Take my money. And one of the things I just wanted to, drive home on this point was that if your credit card has been carrying the weight a little bit more these last couple of months, do not wait until it's maxed out. Do not wait until you have no more options. Start having these conversations now, because like they said in the beginning, the biggest thing they check for is your credit, your debts. And if you're maxed out and your credit is low, you're going to have a low chance of getting your HELOC approved. So make sure you're being proactive. Hey, I need to have this conversation. What's it going to look like? Future pace. The winter's coming. A lot of more spending gets done in the winter with holidays coming, people traveling. So just take this time. The end of the summer's coming up to really just game plan for the winter, because, rates are coming down. So that might be a good opportunity for you to snag a HELOC and, cover yourself with a, winter blanket.
Yeah, yep.
I
It's all
say,
about the 3 PPs, right, Andy?
Yes. Prepare. Well, I say prepare. But
Prepare, predict,
predict,
plan,
and plan, predict. We have more P's than that. Persevere.
But no, that's very true. That's awesome advice, Brian.
So you were talking about the credit card rate. Now I wanted to just throw out, I think it's like 21% is like the average right now. I know some are as high as like 29.9 or whatever. But the point being that to dovetail on that a little bit, just to close my final thought here, is like they're in the teens, even in the mid-teens, is better than the 20s. That can make your life a whole heck of a lot better by relieving some of that stress and taking the better offer, and especially if there's a discount, give it a second look. Give it a second look.
I'm going to tell you guys that what Brian just said, I mean, you hit the nail right on the head. I ran credit, and I'm like, how did their scores? Because when I first got them in their home, they had excellent credit. Mm-hmm. And then when I run their credit, I'm like, why did it go down to a 608?
Yeah.
Like, what happened? And it's like, they have late payment. So I'm looking for late payment. They had none. Their credit utilization was so high that remember, credit utilization impacts it by 30%.
Yeah. That's 30% of your score.
Right? Mm-hmm. And so, man, they got nailed. So I asked them, the cool thing is we run these simulators, so I had them pay like $1,400 and change, so it could go above a 640. That way I could put them in a better
And to follow up on that, one of my clients was looking at a HELOC initially, but then after we ran the credit, did the numbers of what it was looking like for a HELOC, their credit was low, that it was going to spike up the payment higher, so they had to look into doing a cash out refinance. And that was another option. If your credit is, a little bit shot, looking into a cash out refinance through FHA or VA for your VA client will be a lot more accessible and, help you have a little bit, let you have a little bit more debt, let you carry a little bit more of a less credit score. But at the same time, that shouldn't be an excuse for you to say, hey, I could just go to that route. Because then you do have to refinance your whole property. But, that's another story.
Can I hit you guys with some quick lookups?
Yeah.
Just real quick. So I just looked up average credit card rate like right now. Forbes is reporting 27.62.
What?
Lending Tree 24.84. NerdWallet 27.7 and Investopedia 24.72 as
crazy.
median and or average. So I typed in average. Some of these said median, some of them said average. But
still,
Andy, if you're making the minimum payments on that, it's going to take you like 13 to 15 years to pay that off.
Yeah, at least. I mean, just. God, yes.
I'll let you borrow $100 if you're going to pay me $27.
If you own a home, if you own a home,
that's so true.
If you own a home that has equity and you unfortunately have had some behavior that has led to high credit card balance at really high rates, please make a comment. Let us help you. Let someone else locally help you to get out of that.
Or if you're into the situation and you got the HELOC, please let us know how your experience was, or if you did a cash out refi.